All right, we showed you the mystery chart before the break. It is FedEx, the stock reiterated buy at Citi. It's one of our calls of the day. Josh Brown, tell us, you just bought it.
Yeah, I probably won't sway Jenny because this is technical. I think the stock's been trying very hard to find a bottom for most of the last 9 months. It appears as though the buyers are willing to show up in the mid-190s. That's about 10% lower than where she trades today. So that's where my stop goes. I don't have an upside target. I think that there's the potential to break out above 220, which it's flirting with right now, snap that downtrend, and then what I would do is I would ride it higher and roll my stop up systematically. Every Friday, take a look at the weekly close and make that determination. I don't want to own it if it does break below that recent support. I know that the Citi analyst that we're going to talk about put out a note talking about there's a tactical opportunity here because there's their first investor day in 10 years. I don't think they would call it Investor Day for the first time in a decade if they wanted to let everyone down. So it seems likely they'll put some long-term targets out there, possibly reaffirm this year's guidance, maybe even talk about increasing the dividend. Some of those things should be good enough for this stock to have held that support. And, you know, again, I think we're in this bear market rally as well. I know I've been saying that for a long time. Maybe it gets boring. But that doesn't mean there aren't shorter-term opportunities and things that you can do if you want to. So fundamentally, if they can earn $20 a share over the next year and they can affirm that guidance, I don't see any reason why this stock couldn't trade 13, 14 times that number. That would put it about 250, and I'd be happy with 20% upside for the potential of 10% downside risk.
I mean, technicals can be as good a reason as any to buy a stock. He's making it clear that it's not necessarily for a extraordinarily long period of time that he may own it, but nonetheless, what do you make of it?
Well, I love that this has two different sides. You can look at it technically and find a good reason to own it, and you can look at it from a fundamental perspective and also find a good reason to own it. So what I love about this conversation is this would not be for the dividend portfolio. This would be for our disciplined growth portfolio. And what we're talking about now is we are talking about real growth companies. So I think we've confused what growth companies are over the past couple of years. We've thought of growth companies as those with share prices that just go up and up and up. But FedEx actually has earnings that go up and up and up, and they're not at stratospheric levels. They're at reasonable levels. So now you get this huge discount, 40% off. It's trading at 12 times. It's got decent earnings growth ahead. It's achievable. It's a fantastic company that we all know, and it's critical to our everyday life.
So if you believe all of that, right, you're making a fundamental case to own it.
Yeah.
Does Josh's technical take sway you to do it now?
No.
Why
no.
not?
It's just not our process. And every portfolio manager has to be true to and disciplined to following their process and not straying from it. So sometimes the technicals make you speed up on your process, but you still need to go through it. And you still need to look at it and say, what are the earnings here? How much does this make sense? And what do I have in the portfolio that isn't going to grow as fast? So last week when we talked about selling Amgen and buying Uber, right? Amgen was still growing. We just thought Uber could grow more. So now we'll look at FedEx and say, is there enough growth and capital appreciation in the shares that makes it a replacement for something that we currently own?
Got you. Weiss, you used to own FedEx, right?
Yep. And I've been trading it, hits 200 or below, as Josh points out, and I buy it. Frankly, I just missed it this time. And I do believe, look, you've got a new CEO, you've got the first investor day, analyst day in 10 years. They're not coming on to say, hey, you know, we're cutting our earnings by 10%.
Right, things are horrible.
Right. So it's going to be an inauguration, and those are generally celebratory. The only question I have is how much is in the stock already? And if I were to buy it, there is a one-to-one correlation pretty much with UPS. So from Jenny's standpoint, if I were her, I'd be looking at UPS for the dividend portfolio with a much higher yield. Look, I like the fundamentals. Freight prices are up there. The question is, when you go into recession, undoubtedly, those prices are coming down. So I want to know how much they have in their guidance for that eventuality.
Jenny?
On UPS?
Yeah.
So the dividend portfolio has a 5% or better hurdle. So even though UPS is juicy, it's not juicy enough for me. So we're not looking there. But part of the investment process, too, is to say FedEx, UPS, which is better. We also already own GXO and XPO. Would that give us too much concentration to logistics? So that's all part of the conversation.
I mean, because UPS has outperformed FedEx on a wide number of stock metrics.
Right. And so this is where I go back to when the decision was made a couple years ago for the growth portfolio. What do we own? XPO, which then became XPO and GXO.
Right, which Weiss owns.
FedEx, UPS. We looked at all of those and we said, how do we want to play this space? And what we wanted to do was we wanted to invest in XPO because that was management of the supply chain in a very, very high growth manner. Now, yeah, UPS has outperformed them. GXO, XPO, FedEx have all been kind of lousy this year, but they're great companies. And I think as someone watching the show, I honestly think you could kind of own any of these, and I think you could have a really long time horizon.
Okay.
You're going to get bobs and weaves along the way, but I bet you look back in 10 years, and any one of these 4 companies has made a great investment for you.
Oh, we got to wait 10 years. All right. We'll wait.